the Return Podcast. It's William McCoy here, founder and CEO. Got my other founder, uh, Marvin Clement.
Hey everybody, Marvin Clement, co-founder of Karuti.
And so, on our first episode, we just want to explain to you what this is, right? So we're obviously two black founders, right? We met about 20 years ago now. We consider each other cousins. You know how that is with Africans and African Americans, right? So we
Kinfolk.
kinfolk, right? We've been tight ever since. We really are like family. We've traveled the world together. We've seen a lot of great things. And we realize that there is things that we have in our wheelhouse that we want to share because there are specific things that are happening in the world right this minute that are both beneficial for what we imagine is going to be the upcoming future for Americans, but then Black Americans, but then also the continent of Africa and wherever we are. So every week we're going to be breaking down two things: entrepreneur topics, but then we're going to also break down founder topics as well, and mainly around the idea of crowdfunding. Now we're also going to hop into some other things, fun things, right? Things that make you laugh. We'll bring up other topics and things like that as well. We'll have guests on the show, but this is really just a way to educate and then also make it so that other people can approach us and ask us about what's happening, what's going on.
Most definitely. Hey Will, why don't you tell us about like how this started and you know how you came into the entrepreneurial life?
So I've been an entrepreneur for almost 17 years now, right? I started with a real estate company. We did everything from property management to development, and then I created an app that connected both real estate agents and customers, or buyers and sellers, and then put the real estate agents on the outside. So I've been in technology and real estate for a while. I have had some other ventures like VC, EV, charging platforms. I've built platforms for companies. I've been in technology for a minute. Karuti has evolved, right? It started out as a way initially for us to be able to connect diaspora to the continent of Africa. That was our original purpose when we were in Latin America, first talking about this idea. You remember that?
Man, yeah, I can't forget. Just briefly on my background, I have a background in tech, and actually, my first business was in. I had a personal training, mobile training business. Again, like as Will mentioned, we met up about 20 years ago, and we've just been able to collaborate on many different entrepreneurial investors. But we both always had like an entrepreneurial investor mindset. So I remember when we got together, and when Will introduced me to the concept of Karuti, it just kind of grabbed my attention. Um, and Will's been building marketplaces for a while. So as we structured this out, and as we were saying, it was the genesis was about bridging the gap with some needs in Africa, but it also gave an opportunity for us to get to where we are right now, and it's been very interesting. But like crowdfunding in 2016, SEC regulations, crowdfunding see allows everyday founders and everyday people to come together, pool the resources into, and to build generational wealth. And I think that's what it's all about.
Yeah, I remember when it first hit me what we had to do. And so we kind of pivoted from, connecting diaspora. By the way, Kurudi means return in Swahili. Swahili is the widest spoken language on the continent of Africa. And so when we talk about return, as it started to kind of evolve and unravel, we realized that a lot of people in America, specifically Black Americans, don't get to take advantage of the ROI or the return on their investment that our counterparts do when it comes to investing in startups or in any type of company. We typically do it through the stock market, but there are other vehicles in order to do that earlier on in the relationship with that company that can be huge returns into the future. I remember reading an article as I was going through my own challenges of finding funding. And keep in mind, I had big client names who were using our products. We had revenue. We had survived at least 2 years of owning a company. So we had gotten over the big hurdle there. And then we actually had technology that, made life simpler, right? Or multiplied whatever aspect we were doing. But we still had a tough time finding funding. I remember talking to over 200 VCs, and I found out that there are 200 different ways to say no. And so that's when it hit me, right? I was reading an article and it popped up from Crunchbase. And if you know what Crunchbase is, if you don't know what Crunchbase is the company with all the data on all the companies or startups out there, all the founders out there. And so they're unbiased when it comes to their assessment. Plus, they have all the data. Well, they brought out this article in 2022 that said less than 1% of VC funding goes to black founders. And I remember reading that back in the day, and I was like, okay, well, it is what it is. But then they recently brought it out February again, that same thing in February of this year, 2025, and the number had dropped when it came to the amount of funding. So we are now under 1% when it comes to the amount of funding. And it hit me because that's exactly the experience that I had. We did not have that ability to cross the chasm, as it were, and get the funding that we needed.
Yeah, that was a point that really stuck out to me, Will, when we were first discussing this. In like in summary, I think like traditional methods of investing, there there's a changing in the guard, and I think that crowdfunding definitely fills that gap in this modern world. And the main point is because it serves everyone, and that's kind of what was very attractive to me, and that's kind of why Karuti was something that well, because it's you, but that's why I was really interested in coming aboard and helping develop this project.
So when we talk about crowdfunding, it's three types of funding. Well, two types that we really talk about. There's what is called equity crowdfunding. So that is crowdfunding when it comes to investing in companies, and then there's the one that people typically think of, which is what we call reward based or donation based crowdfunding. Those would be crowdfunding vehicles or models like Kickstarter or GoFundMe, where people are giving donations, and what comes back to the person who gives money is perks. Those perks can be in the way of, like, let's say if you have a movie, you may get first dibs of seeing the movie. If you have some type of like wine or beer that you're making, then you may send your first cast out to people. But there's not really equity in that company. You're basically saying, hey, look, I like your idea. I like you as a person. I'm going to give you a few dollars, right? You also get some goodwill back in the donation side. With equity crowdfunding, the difference is that you are giving money, but you are looking for a return on that investment, right? And so that return on investment typically comes as that company grows from level to level. So you start at the seed level, then you go to maybe Series A, then you would go to Series B, and so on and so forth. And as that life of that company grows, then your investment grows, your initial investment grows with that company over time. At some point, uh, typically at an IPO, you are able to then cash out on that stock that you've had with that company, or that share, the equity you have with that company, for a bigger return. So we're talking about equity crowdfunding specifically because it fills a specific gap that black founders have, which is getting from the seed to Series A, right? And then from Series A to on. So, uh, as Marvin was stating, back in 2016, the SEC introduced it, regulation crowdfunding, right? And it was really meant to democratize funding. A lot of us don't know about it because we think about the donation or rewards base, but for founders, this is a real way to get yourself off the ground and even to test your model, see if people will invest in you, see if there's traction there as well.
Definitely. And, there's a lot to unpack, and, there's definitely a strong compliance aspect to this, but going through Reg C, CF, like we'll articulate the benefits. And definitely, if we want to explore more, you can definitely take a look at FINRA.gov or SEC.gov, and it can give you the compliance that you need if this is something that you're interested in.
Yeah, it's not a shortcut per se, but it's definitely an option outside of going to a traditional bank, which if you're a founding company, they typically want to see at least 2 years financials. You may not have that. They also want to see some collateral that you may have, whether it's a home or some cash or whatever it may be. So they want to see these things that you typically don't have when you're starting an idea. Crowdfunding will allow you to do that because it'll allow you to get money from everyday people. So people like you and I can say, hey, look, I see your idea. I love your idea for a mixed use building that is totally sustainable. I'll give you $100. And if you get a million people to do that, right, then you can see like how quickly you can grow. And that's the secret that I found that a lot of these companies had. They had they had started a lot of their investing in crowdfunding, their raises on these crowdfunding exemptions, both CF or Reg D, which allows for both accredited investors and then in some cases non-accredited investors, and then moving on to what is called Reg A plus, which allows both accredited and non-accredited, but it's almost like a mini IPO, right? And so they were able to use these exemptions in order to get themselves off the ground, but then also to get some traction.
Right. And correct me if I'm wrong, Will, like the expected growth of the overall crowdfunding market is about 50 billion by 2030.
Yep. 50 billion by 2030. Globally, that number will be even bigger. Um, Here's a crazier number. So BlackRock put out that they're looking at what is called alternative investments, so people who are investing in things outside of purely the stock market. That market is expected to be almost 26 trillion globally by 2030, right? So you'll have people investing in all types of different vehicles by 2030. And so this is an opportunity that if you have a company who is looking to scale, not just here in the United States, but globally, people will be looking for different opportunities to invest into different vehicles directly.
Most definitely, most definitely. And it has to be said, there are inherent risks with any investment, but in my personal opinion, I think a lot of these risks are nullified and mitigated with this crowdfunding model, and I think that's why it's so exciting. And again, I think education is key. So, SEC.gov, FINRA.org, you got to really familiarize yourself with terms like accredited investor, traditional investor. That way, you can make informed decisions, not just for yourself, but just for your long term future and for potential spotting out potential projects that are going to be fruitful for you.
Yeah. Again, when they found out the less than 1% of VC funding goes to black founders, and this year it was even less, it actually dropped some. It was really eye opening that this is when I started to do some research on vehicles and started to figure out how these companies were getting from one place to the other. They were utilizing these exemptions. It really hit me like a ton of bricks that like founders should definitely be black founders and people of color should definitely be looking at crowdfunding, not just in the sense of donation or reward based, but looking at crowdfunding as a way to be able to scale their company. You can just so that as a founder, you can raise up to $5 million in 1 year. That's the limit on Regulation CF or Regulation crowdfunding exemptions, which means that for a company who's really looking to scale, that's their opportunity to be able to get, quite a bit of money to get themselves started. Now, FINRA and SEC wants us to always say this. So to all the founders out there listening, this podcast is not any type of investment advice. Our goal is to educate you on how the system works. And if you want to learn more, obviously visit SEC and FINRA for their rules. But, we love to talk to the founders. Please visit Karuti.com. We are actually launching our own raise at www.wefunder /Karuti, which will allow you to be able to kind of see what a system looks like. But then you can also see ours by going directly to our site as well.
Right. Yeah. So please, check us out on WeFounder, and please visit Karuti.com, and just keep learning, keep investing, and we hope to see you. We hope to see you soon.
Thanks for joining us as we turn remittance into ROI and goodwill into generational impact. We'll see you guys next week as we break down more terms.
Peace and prosperity.
Take care.